So you're about to submit your tax return to HMRC. The question is, how much tax will you have to pay? Watch this video as I go through all of the essential details. Hi there everyone, my name is Simon Misiewicz from Optimise Accountants. I'm here to help you grow your wealth and save you tax. And in this session we are going to be talking about tax, but there are different types of taxes that you need to be aware of, not just the tax that you're about to pay. And in this session, well, because there's so many taxes we need to pay, we're going to be focusing on the payment to HMRC for the tax due. You have just submitted your tax return or you're about to submit your tax return. You need to know exactly how much tax you will need to pay. And we can start this really by understanding that the tax year is the 5th of April every single year, and you have to then submit and pay your tax return by the following 31st of January. So it gives you, in effect, 8-9 months. Now, what will be due is the amount of tax that you pay, but there is also this thing called payment of an account. Payment on account is something that we'll talk about later on, but it's not necessarily just the tax that is expected from you for this tax year, but you are forward paying for future tax returns as well. So people do have a bit of a shock when they think they've got a £10,000 tax bill only to realise they've got to pay £15,000. So what is the payment on account based on? Well, it's based on your taxable earnings. So they'll look at, HMRC this is, will look at exactly how much money you earn, whether that's through employment, self-employment, investments, or property, real estate, all that kind of income will be taken into account. We've also got based on forecast income as well. We'll talk about that later on because surely they'll be focusing on just one income stream. Well, not always, and we'll talk about how you could take advantage of that one a little later on. They'll also see if you are going to have 80% of your tax taken from you via PAYE, then you don't have to pay this payment on account. So really, this payment on account affects self-employed people or people with a lot of real estate income. And they'll only have a payment on account that is due if you have tax that is more than £1,000 on your tax bill. Don't forget that your first payment account is the same date that you pay your tax bill, so double horror. You also have a second payment account which is due the 31st of July, which is in a sense 6 months after the first payment on account. The big question is, how much tax do you need to pay, and have you worked it out? Now, for a lot of people that leave it to the last minute, as in the 31st of January, which is the majority of people, it has to be said, they sometimes have a fright now because now they've got a tax bill that they didn't know how much they're going to pay, or indeed how they're going to pay it. Now that's the problem, because if you are not forward planning, sometimes you are not going to get all the tax reliefs that are possible. In fact, are your friends saving tax where you are paying it? And indeed, there is a great saying of FOMO, you know, what else am I missing out on? And that is where we at Optimise Accountants can help you. We can have a tax consultation with you. If you use the code YouTube25, you will get that 25% discount. So make sure you check out that link below the video, and it should be appearing just above my head right now as well. So back to the self-assessment tax return. If you need to do a tax return, do you? Do you not? Great question. You may already be filing a tax return. Skip ahead. But if you're not filing a tax return and you're not sure, then do watch that video, and it's appearing up just above my head right now. And if you do need to file for self-assessment tax return and you haven't registered for taxes yet, then don't worry. We have a link just for that as well. So that's appearing above my head. So go ahead and watch that video. So let's go back to a payment on account then. So let's imagine that you had a large tax bill of £80,000. Now it's based on self-employment income as well as real estate property income. So most likely it's not going to be collected by PAYE. So the HMRC will want to have this payment on account. And the way that they look at it is they'll say, well, it's £80,000 tax bill. We forecast that for the future as being the same, and therefore we'll just take 50% of that tax in the year to be the payments account for next tax year, which basically means that you've now got a total tax bill of £120,000. And this really does freak out a lot of our clients, because they'll say, well, how much is our tax bill forecasted maybe a couple of months ago? And we'll say, well, £80,000. And then we send them a tax return, it says £120,000. And that's because they've got this first payment account. So there's a great question of, well, how much tax am I due? But actually the better question would be, well, how much total tax will I have to pay, taking into account my first payments on my account? Because here, wow, 50% extra, £120,000. And in this example, I'm sure most people do not have that just on the side of the settee that they can go and grab that £120,000. It's a lot of money. So you do need to forward plan how you're going to pay this liability. So even though you've paid your tax bill on the 31st of January, you've now got this extra payment on account on the 31st of July, which is going to be the £40,000 that you've paid on your first payment account already. So this £40,000 is the second instalment, which basically means that by the 31st of July, you would have paid your tax bill for the following tax year, which means you are forward paying your tax liability. And people that make these first payments and second payments that don't file their tax return until the 31st of January means that they could well be overpaying tax and not claiming back that tax relief on the overpayments when they should. So anyone that is expecting to make these payments on accounts more than their actual tax liability for the tax year, they should do their tax return maybe on the 1st of August, or even beforehand if they're not going to, or even before this 31st of payment that you are likely to pay. So it's really important for people to look at their tax position and say, when should I file my tax return? If you're going to pay this 31st of July, then you ought to be doing your tax return beforehand if you know you're going to be paying less. Now, the other side to it is how can you really reduce your payment on the 31st of January? Well, that's relatively straightforward. There are a couple of things you can do. You could reduce the payment on account. How do you do that? Well, remember what I said at the very beginning, it is based on your forecast. So if you want to adjust your payment on account because you know you're going to earn less in the next tax year, then you could adjust your payments account to say, well, I know I'm going to be paying less, receiving less taxable income, which I should be paying you. Therefore, I want to reduce my taxable earnings and therefore reduce my payments on account. Very, very effective way, if indeed that is true. You can also spread your tax bill as well. So if your tax liability is less than £30,000, you can spread your cost of tax payments, provided that you have contacted HMRC by the 1st of April. So you haven't left it until afterwards. You've been proactive enough. So from the date of the 31st of January, when you might have your tax liability due, up to the 1st of April, you've contacted HMRC yourself or through your accountant / tax advisor, then you have the possibilities of contacting them to agree a payment plan. It is essential that you don't have any outstanding debts with HMRC. If you do, they will deny any payment on accounts or, spreading that payment over. The final thing I would say is always plan ahead. I know a lot of people will leave this burdenous, non-value added activity of filing tax returns, but really you could be paying a lot more tax because you're not planning ahead and getting your tax return done nice and early. And don't forget, it is all about contacting HMRC. Very difficult in these circumstances. Always difficult to contact HMRC, to be honest. So what can we do? So here we've got the scenario before. So before we make any adjustments, and we've got this tax liability of £80,000 in the year. Now, what you'll notice that the payment on account is £40,000. But what we're going to say is, well, we have adjusted the payments of accounts because we know full well that this particular client in this situation is going to be earning less money in the next tax year. So the payment account on the first payment account on the 31st of January should be £15,000, not 40. So basically that means that they're now going to be paying £95,000 worth of tax, not 120. Furthermore, we could say, well, actually, we're going to take that £95,000 here and then divide that by 6 months. So we are going to be paying £15,833 per month to pay down this £95,000. So if you haven't got £120,000 knocking around, which, well, let's be honest, who does, then you can certainly go with that approach. There is a URL below and hopefully appearing above my head, but it's a URL in the description of how to pay your self-assessment tax bill. So make sure you go and check that out from HMRC. Don't forget, there are so many different types of taxes that you might pay too much on. We have discovered about the payments on account, but there are so many areas of tax and you need a good tax advisor to help you reduce that tax liability. You can book our time to make sure that you don't pay too much tax using the code YouTube25. And don't forget, don't focus on the price of a service. Focus on the cost of getting it wrong. So how much tax will you overpay because you don't want to pay for a tax advisor? I shall leave you with that one. But don't forget to press the like button on this video. Also, tell me your questions, what's been going on with your payments account and submitting your tax returns by leaving a comment below this video, and I will be sure to reply back to you. And don't forget to subscribe to this channel. Until next time, my name is Simon Misiewicz from Optimise Accountants. I shall see you again very soon.